Cardano whales just loaded up $204 million worth of ADA, while everyone else is panic selling. And the futures market is screaming something completely different than spot prices. What's up, everyone? Welcome back to another episode of Gold Rush Crypto Daily. Today we're diving deep into Cardano. I've got two articles here painting a fascinating picture of what's happening beneath the surface. Block News is reporting on massive whale accumulation during this pullback, and Coin Edition is breaking down the technical setup with critical support levels that could determine ADA's entire next move. These articles hit around the same time but focus on completely different angles of the same situation. If you're not subscribed yet, smash that button because we're about to break down whether Cardano is setting up for a monster bounce or headed lower. Alright, let's start with Block News. I like them for whale tracking. They usually have solid on-chain data. The headline, Cardano whales add 204 million in ADA during market pullback. Here is why analysts see a bounce ahead. $204 million, that's not pocket change. Let's see what's happening. Cardano's price action has been anything but calm lately. ADA has struggled to hold key support, leaving traders split on whether the next move will be up or down. Anything but calm is an understatement. I've seen the split in my community too, some screaming buy the dip, others heading for the exits. At the moment, ADA is trading around 57 cents, down roughly 1% on the day as volume slid about 11% to $744 million. Volume dropping 11%. That's interesting because lower volume during a dip can mean selling pressure is exhausting itself. Over the past month, ADA's seen a nearly 19% pullback, despite gaining 7% over the last week. The range has been wide too, hitting a 30-day high of 74 cents before dropping to as low as 49 cents. From 73 cents to 49 cents in a month, that's a 33% swing. This is exactly what I mean when I say altcoins are where the real volatility lives. But not everything looks bearish. Derivatives data tells a slightly different story. Open interest in ADA futures climbed over 2% to $680 million, suggesting traders are still positioning themselves for potential upside. Wait, open interest climbing means new money entering futures positions. This isn't just existing traders shuffling bets. Fresh capital is coming in, and when open interest rises while price consolidates, that's often a setup for a big move. When open interest increases, it means conviction is building. Traders are putting money where their mouth is, actually opening leveraged positions on ADA. That bump in futures activity could be an early sign that sentiment is starting to lean bullish again, even if the spot price doesn't show it yet. See? Sometimes derivatives lead spot. Smart money plays with leverage first, retail follows later. This could be the early signal. Market analysts seem divided, but Martinez sees the recent dip as part of a setup for a possible rebound. Martinez predicted ADA could first fall back to 50 cents, a key support area, before bouncing towards 70 cents if that level holds. Martinez, I follow his work. Decent track record with Fibonacci levels. So he's calling 50 cents as the floor, then a bounce to 70 cents. That's a 40% move. But the key word is, if that level holds. So he explained that 50 cents has acted like a make-or-break zone for ADA lately. If bulls defend it, momentum could shift upward quickly. But if that floor gives way, things could turn ugly fast. And yeah, make-or-break zone is perfectly accurate. 50 cents isn't just some random number, it's psychological. Both bulls and bears are watching this level. If it holds, buyers gain confidence and start stacking. If it breaks, stops get triggered, margin calls happen, and honestly, everyone rushes to the exit. That's how cascading liquidations work. Now here's where it gets really interesting. While retail traders debate direction, the big wallets are already making moves. Data from Santiment shows Cardano's largest holders, whales and sharks, have been quietly stacking up ADA over the past week. Together, they've added about 348 million ADA, worth roughly $204 million. quietly stacking, while everyone's arguing on Twitter. Whales are just buying. No noise, no announcement, just accumulation. 348 million ADA, $204 million in 1 week. This is institutional level, VC level, mega whale level money. That's nearly 0.94% of the entire ADA supply, which isn't small by any means. Almost 1% of total supply absorbed in a week during fear. So when whales take supply off exchanges during fear, what happens next when demand comes back? Well, less supply available means price has to move up faster to find sellers. That's just basic economics. Historically, heavy accumulation by whales has often preceded market recoveries, as these players tend to buy when fear dominates and sell once sentiment shifts. Buy when fear dominates, sell once sentiment shifts. That's Warren Buffett's playbook. These whales are literally doing that right now with ADA. When was the last time you saw whales buying at the top? Never. They buy when people are scared, when articles are bearish, when sentiment is in the toilet. Then they sell to you when you're FOMOing in at the top. The coming days will likely decide whether ADA's latest dip turns into a bounce or, a deeper correction. If it can hold the 50 to 52 cent range, traders might finally get that move towards 70 cents. But if it breaks below support, another slide toward the mid-40s wouldn't be off the table. There's that 50-cent level again. Everything hinges on it. Either way, with derivatives heating up, whales buying aggressively, and retail sentiment kind of shaky, Cardano's setup feels like a coiled spring, tense, unpredictable, and just waiting for its next catalyst. Coiled spring, perfect metaphor. Compression, tension, energy building. When it releases, that move will be violent. Question is, which direction? So Block News is painting this picture. ADA's beaten down around 57 cents, volumes declining, but underneath we've got rising futures open interest and whales accumulating over $200 million. The key level is 50 cents, hold it, bounce to 70, break it, and we're talking mid-40s territory. But I've got a second article from Coin Edition taking a much more technical approach to this exact situation. Let's see if their analysis lines up. Now let's check out Coin Edition. They typically do deeper technical analysis with chart patterns and Fibonacci levels. Headline, Cardano, ADA price prediction. ADA stabilizes at mid-range support as open interest surges. Open interest surges, already seeing confirmation of what Block News reported. Cardano is attempting to stabilize after several weeks of downside pressure, yet market conditions remain uncertain. The asset trades near 56 cents, where recent volatility has forced traders to reassess both trend strength and liquidity. And, attempting to stabilize is the key phrase here. We're not stable yet, we're just trying to form a base. ADA's latest price behavior shows early improvement, but broader indicators still suggest a cautious environment. Moreover, the market structure continues to lean bearish, even as buyers try to defend higher lows. Wait. So market structure continues to lean bearish. Coin Edition is more cautious than Block News. Block News talked about coiled springs and whale accumulation, but Coin Edition is saying structure is still bearish. This is the perspective difference I wanted to see. ADA's decline from the 89-cent high pushed the price through several Fibonacci retracement levels. The deepest reaction appeared at the 0.236 zone near 53 cents. Buyers responded at this level, and the market formed a short-term rebound. However, sellers returned at every relief move. And yeah, sellers returned at every relief move. That's the problem. Every time bulls push higher, bears just smack them down. Not a healthy pattern for bulls. The supertrend indicator signaled selling activity around 59 cents, which now acts as important local resistance. Besides this zone, the market faces broader hurdles at 65 and 71 cents, resistance at 59, 65, and 71 cents. That's 3 walls to break through just to hit that 70-cent target Martinez mentioned. Multiple rejections at those levels means trapped buyers up there desperate to get out at break even. The current support area sits between 56 cents and 55.5 cents. A drop under this region exposes the 53.4 cent zone again. Losing that area may open the path toward 50 cents and even 47 cents. Wait, we're literally sitting right on support as we speak. Price is 56.47 cents. Support is 56 to 55.5 cents. We are at the line right now. And there's 50 cents again, both articles pointing to it as the critical make-or-break level. Coin Edition even says 47 cents if 50 breaks. That lines up with Block News saying mid-40s. Cardano's futures market shows stronger activity than earlier in the year. Open interest has climbed from nearly $300 million to more than $640 million since late October. See? This backs up exactly what Block News reported. Open interest more than doubled from $300 million to $640 million. When two independent sources confirm the same data, you can trust it. The steady growth in open interest indicates rising speculative interest and increased liquidity. Traders appear to be preparing for larger moves as volatility builds. Preparing for larger moves. They feel it too. The market can sense something's about to break, and leverage positioning means people using margin, which amplifies moves in both directions. This is exactly what I mean by coiled spring. When leverage builds and volatility compresses, the eventual move is massive because all that leverage has to unwind in one direction or the other. Spot flows continue to reflect selling pressure. Outflows dominated from September to November. Persistent outflows often signal distribution phases rather than accumulation cycles. Interesting take, honestly. They're saying outflows could be distribution, not accumulation. But the first article said whales were accumulating, so either whales are buying OTC and not moving through exchanges, or, one interpretation is off. ADA may struggle to build support until spot inflows return consistently. Fair point here. They want to see money flowing into exchanges before believing a reversal is real. You really need buying pressure on exchanges to drive the price up. Both are right, just different time frames. Whales are accumulating for a longer-term play, months out. They don't care if price dips to 47 cents first, they'll just buy more. The technical structure Coin Edition describes is accurate short-term. We are in a bearish pattern with heavy resistance above. So here's my take. We're probably going to test that 50-cent level. When it happens, if we get a strong bounce with volume, that's your signal the bottom is in, and whales are defending their zone. If we break 50 cents cleanly, I'd wait for the 47 to 48 cent area before considering entry. Okay, so here are the main things to keep an eye on. First, watch that 50-cent level like a hawk. Second, monitor open interest. If open interest keeps climbing while price drops, that's actually bullish because shorts will need to cover. Third, keep tracking those whale addresses. If accumulation continues during dips, that just confirms the smart money thesis. Fourth, look for volume. Breakouts without volume are, honestly, just fake. And fifth, remember the broader market matters. If Bitcoin dumps, ADA follows, no matter what. So, which article convinced you more? Are you team whale accumulation or team cautious technicals? Drop your thoughts below and let me know if you're holding ADA, waiting to buy, or just staying away. I'll be monitoring that 50-cent level obsessively, trust me. If we get a significant move, you can bet I'll be back with an update. And hey, subscribe with notifications on so you don't miss it. Quick reminder, folks, everything I've shared is just my opinion and analysis. This is not financial advice. The crypto market is honestly super volatile and unpredictable. Always do your own research and never invest more than you can afford to lose. If you got value from this breakdown, smash that like button, share this with someone watching Cardano, and drop a comment about where you think ADA is headed. I'm Gold Rush, this has been Crypto Daily, and I'll see you in the next one. Stay sharp.